Hello, everyone. Good evening. Saturday evening. It's George DeSantis here with the look at the market for the week ending Friday, September 25th. And as usual, we bring up a disclaimer before we go any further. And this simply advises you that I'm not attempting to give any particular person investment advice. I do this for my own purposes, make a video, it's on YouTube. Anyone can look at it, make whatever you wish of it. But it's not an attempt to give any particular person advice. Um, as usual, we will review the general market and look at some individual stocks as well. Unfortunately, tonight we're having trouble with the Shaken Analytic software. They just added a very good feature to it, but unfortunately, it seems to have also added some bugs. So I'm waiting for them to call me and see if we can correct it. But in any case, we will use TC2000. And let's begin then by taking a look at the S&P 500 on the weekly chart. So here's a weekly chart of the S&P 500. Let's take a look. Um, I always look at the moving averages first, so let's do that. The 4 is trending down. It's been doing so for 4 weeks now, three or 4 weeks. And it's still above the 9 EMA, that red line, and 9 is above the 30 weighted moving average. So insofar as the moving averages are concerned, we didn't get the same kind of a look, same breakdown in terms of the trend lines as we do, of course, on the daily chart, which is a shorter term chart. But we also have the parabolic for the last 3 weeks above the most recent bars. So this is confirming a downtrend. The other thing we should notice is that last week's bar, or candlestick if you wish, is a hammer. At the bottom of a trend like this, when you get a candlestick looking like a hammer, it's called a hammer. And the implication here is that we are attempting to hammer out a bottom to this downtrend here. We can only hope that that is so. What happened last week is that we pulled back below the 50% retracement level, which is what this was, this line here, dotted line. And we came down to the 618, the sort of golden ratio, golden rule, Fibonacci rule. And the market rejected that price and it went back up to close closer, just below the 50% retracement level. So from a bullish standpoint, that's encouraging, the fact that we have a hammer here on the weekly chart. But let's face it, we are not out of the woods here at all. I mean, we couldn't make a very strong case that the trend is now up. The trend is still down, but there are some glimmers of hope here. And when we look at the daily chart, we'll see why. A little more data on the daily chart. If you go down to Williams percent hour, Williams percent hour is still above the magenta line on the weekly chart. And this Williams percent hour gives you the main trend, on the weekly chart. You see it goes back up here in March, April 9, and since then it remained there. The other thing is that Williams MACD histogram, the default setting 1226.9, is still above the zero line, and you have a green histogram bar. Now, the sum of the rate of change indicator still remains above the minus 4% line. So we have conflicting signals. The Williams, MACD, and some of the rate of change, all suggesting that we really haven't fallen out completely out of bed yet. But on the other hand, you have the parabolic here signaling a switch to a downtrend. So we still haven't come out of the water yet. We're above the 50-day moving average, and we'll see a little more. But we seem to be finding support here. That's encouraging. That's 618 percent retracement level. Let's turn to the daily chart. Here's a daily chart of the S&P 500, and if we look at the moving averages first, you can see that on this daily chart, the 4 EMA cross below the 9. And what do I say about signals? This is one of my sell signals, okay? So when the 4 crosses below the 9, we should know that we are going to experience some pain. How much pain, we don't know, but we should expect some pain. Now, if you're trading, yes, and the spider, of course, you take cover, you know. But in this case, the 4 broke below the 9, and it's still there. So insofar as moving averages are concerned, we still have a downtrend. Insofar as the parabolic is concerned on the daily chart, we also have it above the most recent bar. So we're still in a downtrend. You can see that this is the 50-day moving average right there along with the parabolic white dots. That magenta line is the 50-day. So what is happening now is I drew this box. We've been trading in a trading range here for the last 5 days or so. Well, the whole week really. Monday through Friday, we traded within this range between the 50% and the 61.8% retracement level, Fibonacci retracement levels. And right now, the S&P closed above the 50%. You see this daily bar here? It closed slightly above the 50% retracement level. And it appears that we also have a bullish morning star. Now, I did point out last week that we might be able to make a case for this being a morning star. It was a weak case. And it did turn out to be a weak case because we got the next day, we got a pullback here. All right. But right now, you can make a better case for this being a morning star, a bullish morning star formation. Bearish bar, doji type bar, and then a really nice bullish bar. So from a bullish standpoint, this is encouraging too. We seem to have found support at the 618 level, retracement level. We've done so here, we've done so here. All week long, we've been finding support at the 618 level. So that's what we seem to have on the daily chart. Daily, yeah. Now, if we go to Williams percentile, you can see we broke down here on the daily chart. We broke down here on Williams. We went below the magenta line, minus 50, and we remained there. But recently, in the last 3 days, we've been trending up a little. That's encouraging. Also, when you go to MACD, the 1226.9 set of parameters, you can see that the histogram shortened up a bit. Now, what Jerry Appel points out, the guy who, he's a psychologist who developed MACD, Jerry points out that you can use this as a buy signal, but you want to see MACD go above the zero line, and that's usually a pretty conservative buy signal. See, like what it did here, back here in this region, you can see it trended up from there. So we can start nibbling. I traded some stocks this past week, bought and sold, and I do hold some stocks here now. Had a pretty good day yesterday, Friday, yeah. So what I would love to see is, of course, is that the MACD turns green, goes above this zero line once again as it was here. And take a look at the sum of the rate of change indicator. That's trending up too. So there are some people would say green shoots. Let's hope that is so. Okay. Now here's a daily chart of the NASDAQ ETF, QQQ, the Qs as we say. And one of the things I notice here is that we're in that same trading range, that box, finding support at the 618 retracement level. The difference now is that the parabolic on the daily chart of the Qs is now saying we switched to an uptrend. And you've heard me say this before because I know many people that I've come into contact with before say, look, the NASDAQ leads the rest of the market. If that is true, the fact that parabolic just switched to an uptrend on the NASDAQ, we would hope that that's some harbinger of things to come. Now you can notice that Williams is also trending up from below here, from below the minus 50 line, but it's making a little move here. And MACD is also trending up, as we saw on the S&P. So we can look at some charts from stockcharts.com. And here's Apple. Now most of us would be aware of the fact that Apple made a high here and then gave a lot of it back. And so it seemed to have found some support here. In fact, I bought Apple again. I bought Apple and Microsoft again. So I'm in those two stocks again. Pretty big positions. We can take a look at the new high, new lows, the difference between the number of stocks making new highs and new lows on the NYSE. And you can see that it's still way up here. It's still way up here, so it's still in pretty good territory. Now, if you look at the chart with the impulse indicator, the bars painted red, blue, and green, you can see that when the market broke down here recently, we had some red bars and a couple of blue bars. Right now, we have a blue bar. What does that mean? It means that we can either go long or short. We're not inhibited. We're not prevented from either going long or short. But since I'm seeing some evidence of support here, and which is the reason why I bought Apple and Microsoft again, among other things, I think it's possible that we could find some support and move back up. So that's what I did. The other chart, the last one I would like to look at is the percentage of stocks of the S&P 100 above the 200-day moving average. You could see it's still holding above that 200-day average and between the 50 and the 200-day. I mentioned Apple before. Here's a weekly chart of Apple. I just tried shaking again and it doesn't work yet. So I'll stay with TC. You can see that what happened with Apple here, it came down. It came all the way into the buy zone between the 9 EMA and the 30 weighted moving average. The first time that the stock pulls back in price between these two lines, the 9 and the 30, first time since it crossed to the upside, that's a good buy zone. Now that was the weekly chart. Here's the daily chart on Apple. And you can see Apple broke down with the rest of the market right here. And parabolic was above the most recent bar all along, and now it's switched to being below the most recent bars. So that's an uptrend now, and that's why I just bought it. Here's Microsoft. You could see that very similarly, it broke down here, but we can see that now it's parabolic switched almost the same time as Apple, switched to going below the most recent bars. And you can see how MACD is trending up. Pretty soon we should get a buy signal on MACD. I might be a little early on these two, but I did it anyway. Another stock I own is PayPal. I bought it again. And a similar kind of thing. You can see parabolic switch to below the bar. And you can see it's starting to trend up again. Look at MACD, right? I'm going to just quickly go. Here's Synopsys, daily chart. Very similar. These are stocks I own, Apple, Microsoft, Synopsys. I'm just looking at a few of them here. And you can see a very similar looking chart. Nice bullish candle. Parabolic just went below. You can see this trend, MACD trending up, etc. Here's Adobe. I own Adobe. You could see it was in a trading range here. We now have we have a nice morning star like we saw with the others, trending up, okay? Here's NVIDIA. You could see a similar pattern. Apparently what happened was that as we can tell, many of these stocks became so oversold. And if we had shaken, we could see that. I gotta run. We only have 15 minutes. I don't want to go over. Bye-bye.